ටවුන් එකේ විෂන් කෑකට ගියා නම් ඉවරයිනේ.
විෂන්කයා විශ්වාසනීය දැක්ම.
Well, joining us now here, right here on Studio 24 is Kenneth de Zilwa, who is a business analyst. Kenneth, welcome to Studio 24.
Pleasure to be here.
Right, I think Dr. Kenneth, this is a business cycle analyst.
That's correct.
When we talk about business, economy and Sri Lanka, we're talking about growth forecasts for 2019, although Sri Lanka's growth in 2018 is far below estimate and also far below potential.
Sure.
But this year, 4 and 5% between that, what are we really looking at?
Yeah, well, in the to be honest, the last year, I think the final year figure of GDP is still to be released by the Census and Statistics Department. But our estimation is that it will be not more than 3% for the whole year, which is alarming. I mean, as you rightly said, we have been below our potential growth, which is on average had been around 4.5, even at the peak of the war.
Right.
So we are at a really stressful point in the economy from many fronts. The three fronts that I would want to refer to going into 2019 is one being the real sector, where the economic activity takes place, then the banking sector, and we've got the external sector. Now these three combined are going to be extremely challenging, far more challenging than what we saw in 2018. To analyze 2019, we have to look at these three particular segments to kind of make some headway in 2019.
Right.
2019 is going to be, I think, in our estimates, will be nothing greater than 3.5 to 4, maximum 4.
But what's really holding this economy down? 3.5, like you said, during the war, this economy grew faster than 3.5%.
Couple of things. One is, I think many speakers who have come on this program have said the inconsistency in policy. I mean, that is one factor. The second factor is also the current economic model that we are following. There is a great flaw in this model because we have shifted it from an investment model to a consumption model, which is now kind of having its double effect on the economy. One, we are seeing the exchange rate slip because of this heavy reliance on external consumption. If you look at the numbers, it's staggering.
Yes.
Our numbers, imports are $20 billion. So there is a trade deficit of about $10 billion. I mean, that's huge. Our consumption imports have increased on a year-on-year basis by about 18%. Right? It's about $5 billion, our total consumer imports. I mean, consumer imports are sugar, rice, wheat, things like that. So it's huge. So the shift in the economic model is calling a slippage in the currency. That's bringing back the extra costs that we saw in Sri Lankan Airlines, referring to that particular loss. And also the state-owned entities have dollar borrowings on their balance sheet, while their rupee earnings don't complement that. So they are compressed. Their revenues are compressed because of the lack of price adjustments, and you can't adjust price in this particular environment. There is no way that the government can do that. It's how you manage the economy. So once again, it's the economic model that's at fault and not the business sector itself.
You just touched on the exchange rates and how it is affecting the economy right now. Now, it seems to be we are heading towards 200, past 200 for the US dollar somewhere around in April or something. So what can, in your point of view, the government right now could do to reverse this, or should we just let it slide?
Should the central bank intervene, do you think, at this stage?
Well, I mean, there are two parts to this question. One is the rupee exchange rate going to 200. I think it's a little bit over-exaggerated. I don't think it will immediately get there. But if things are not addressed, I definitely think that it will slip faster. In terms, I think it will get to 200. But in the short term, I think the government has already reined in a lot of imports. They brought in a lot of controls, particularly on the consumer import side. Then they are using moral persuasion. Then they're using intervention. We saw the central bank lose about $1.5 billion of reserves in the last 3 months. So that has come to a stop because our reserves are in bad condition. So to supplement that external reserve condition, we are gone now to the bond markets. The bond markets also not that great because of our credit rating being downgraded, and also our secondary market yields have rose to about 8%. So now that puts the government finances into a bit of a quandary.
Right, as we also talk about exports, the currency, yes, the currency fall, the government says is good on our exporters, allowing our exporters to earn high dollars, but then what is the real impact on our exporters? Because we really haven't focused on an export-led economy, no manufacturing to reach our export targets, and just our provisional figures do show an increase. However, I think you as an analyst have pointed out at several occasions that these figures are actually largely diluted.
Yeah, I mean, the export story is not a great story. If you look at the bulk of our exports, in fact, almost 50% of our export revenue is coming from one particular product, which is apparel. I mean, it's sad to say that no other sector has stepped up to this export story that we have been talking about so many years.
Three main sectors, it has completely gone off.
It has gone up because, again, the lack of focus. So our exports, to get back to Indivari's question, why aren't we looking at exports and whether the exchange rates have helped? It's a myth. I mean, we are living in this mythical world where we think that the exchange rate devaluation is going to help bring us exports.
Yes.
That never happens. Globally, it has never happened. I mean, this is nonsense.
What's the real cost on the economy?
It's a huge cost because people don't realize there is a input cost factor that comes into play. Transport costs increase, input costs, raw material costs increase. Those are ultimately passed on to the exporters. I mean, exporters have to buy corrugated cartons, packing, printing material. None of these are produced in Sri Lanka.
Yes,
right? And the fundamental problem in this whole story is that we have got caught into this trap of this comparative advantage nonsense. It's utter rubbish. I've been saying this at many forums.
Right, right. I think that's all the time we have tonight. Thank you very much, Kenneth, for joining us on First at 9 and for sharing your insights with us.
Pleasure.